Let's talk about what's going on with artificial intelligence, AI. Well, Google is a big player, and they just posted their first negative cash flow for the quarter, $6 billion. No big deal. The company's got plenty of money. I'm just saying that there's a sign out here that these companies are starting to spend too much money on this. Steve Eisman is starting to have doubts about AI. Now remember, Steve Eisman was on The Big Short. He was the one that kind of predicted the the housing crisis. But anyway, Big Short investor just sold a key tech stock. I have lightened up. I've sold my Google. A couple of months ago, I've owned Google. I can't even tell you how long I've owned it. I wanted to reduce my exposure to AI. Even Scott Besson of Treasury has come out with a study. It's just a preliminary study. But the Treasury has an internal report warning about the dangers of the AI bubble. Still, analysts said AI investors are taking risks so significant that much of the financial system now rests upon AI meeting expectations for productivity gains and profitability. This is a big deal. This is going to be a major issue for us. Now, if you go back and read William O'Neill's book, How to Make Money in Stocks, he talks about this. He says, after the daily general market averages, I would say the second most important indicator of primary changes in the stock market direction is simply the way leading stocks act. After an advance in stocks for a couple of years or more, if the majority of the original price leaders top, you can be fairly sure the overall market is going to get into trouble. So like I've always said, when the generals lead, the troops will follow. So we're going to take a look at this. Now, I wanted to mention something about gimmicks. One of the gimmicks out there is people think they can make money day trading. Well, this particular statistic says most day traders, people that do this crazy trading, you have to remember the original concept of the stock market in 1907, which was, what this is all about, the buttonwood tree, is to create capital for entrepreneurs and the most productive institutions of society to do positive things. So when you start getting into these gimmicks like options and Bitcoin and day trading and all this stuff, it just takes away the whole idea. We're trying to create a stable marketplace that can be used to raise equity capital for promising companies. It's just amazing that the gimmickry that goes on. People are so naive about this. But anyway, let's take a look at the general indexes. Here's the NASDAQ. You can see here we've broken down below the moving averages. We made a new low today. It doesn't look good. Here are the mid caps. Let's just see if this thing's broadening out. Mid caps are pulling back below the moving averages. Here's the New York Stock Exchange. Now, it's been the strongest one, but it also tends to have a lot of defensive stocks in this index. But you can see even the defensive stocks are starting to pull back. Small caps, we were hopeful that this was going to break out, make new highs, but as of today, we're breaking down below the base. S&P 500, high, we got a lower high, basically moving sideways, but breaking down again today. So the situation with the indexes is not positive. Now here's the aggression index, where we're comparing the NASDAQ to the computer staples. So we're taking aggressive versus defensive. And when the line is going down, it's telling you that defensive is outperforming aggressive. This is an early warning system, but we started to get the signal, if you remember, in early June, We got a breakdown in this particular indicator, and it continues to break down. So it's just simply telling you, be defensive right now. Don't be aggressive. So let's look at the AI stocks that are most prominent in the marketplace, and just let you decide what you think about the bubble, because I think the AI bubble, the artificial intelligence bubble, has popped. Here we go. Applied Materials breaking down pretty seriously, breaking below the 50-day. Now here's the 200-day. That's the critical area. Advanced Micro Devices breaking down. Now 50-day is critical, but also 200-day is critical. But you can see Advanced Micro Devices breaking down. These are all AI stocks. ARM Holdings, semiconductors, breaking down below the 50-day. The moving averages in a downtrend. Here's Bloom Energy. Now this was a company designed to provide energy for the AI data centers. Well, it's breaking not only the 50-day, it's breaking the 200-day. Not good. Here is Ciena. This company makes products for the AI data centers, primarily in the form of fiber optic cabling. Well, it's breaking the 200-day. So it broke the 50-day, now breaking the 200-day. This is not positive. Here's Intel, making CPUs, which are used in artificial intelligence. Breaking down below the 50-day is definitely in a downtrend. Micron Technology, which is storage technology. You've got your high, and then you got your breakdown. Not looking positive. Here's Nebius Group. They build data centers mainly internationally, and you can see the stock broke to a new low today. Here is SanDisk, again memory, breaking down. Stock was down 7% today. Broke the 50-day, hovering above the 200-day. Here is Seagate Technology, another memory stock, kind of holding up a little bit better than the rest, but still breaking below the 50-day. Western Digital, another memory stock, breaking below the 50-day, holding above the 200-day, but I'm still seeing a very serious downtrend here. So basically what I'm saying is we've got a situation where everyone is concerned about the substantial amount of the economy that is dependent on artificial intelligence, and these stocks are breaking down. So continue to keep cash, continue to stay defensive. If you have any questions, please let me know. Thank you very much.